What a results, I have to say. Return on equity I thought was pretty impressive, up 13%. You're making record profit once again. But can you sustain what's happening in Hong Kong? Because Hong Kong really helped those numbers.
Well, clearly, we have now a track record of 9 years of record performance, and we were able to do that pre the crisis, more importantly during the crisis, and we continue to deliver today. So we feel very good about the outlook, and we've said that publicly, that we think we will deliver to a double-digit income growth for 2011.
What's happening in India, I have to ask, because Hong Kong's really, we're seeing momentum here, but in India, you know, it's slumping, your business is slumping. What's going on?
Well, one of the key strengths which has given us significant boost over the years is our diversity, by geography, by product, by segment. I mean, last year, if you recollect, Hong Kong didn't have such a good run, and India sort of came out ahead as the best performing. This year, for the right reasons, I think, we have dropped activity levels in India because of the governance issues in the country at the macro level. But we've also been very prudent with our provisioning, which has taken its toll on the bottom line.
Can you be more specific when you say governance matters in India? What do you mean?
I mean, there is, as you would pick up from the press, lots of issues around government corruption, legal cases against corporates, etc. So it's that kind of environment. The stock markets in India are down 40%. So, you know, it's overall in line with the macro situation there.
It's in line with the macro situation.
But obviously, Hong Kong is, you know, has always been our largest core market. It remains our core market.
And you have this big smile when you talk about Hong Kong. So what about the momentum here in Hong Kong? Because, you know, speaking to HSBC, which also announced their results earlier on this week, we're talking about mortgage rates. They had to raise mortgage rates independent of the central bank here in the city, independent of the Federal Reserve. What about for StanChart? Are you having to do that as well?
Well, we've took the lead actually in raising mortgage rates. We've taken our NIMs up quite significantly in Hong Kong. But increasingly we are looking at our business in this part of the world as Greater China, because we think there is more to the bottom line for us than just the individual countries. We think there are synergies between China, Hong Kong, Taiwan, which are very rich pickings. And you can see it in the renminbi volume of business that we are doing.
Well, what about costs? You know, that seems to be the big concern right now in the banking community. HSBC having to cut 30,000 jobs worldwide. Barclays also announcing job cuts as well. But I shall also point out that HSBC says they're hiring in this region. What is Standard Chartered doing? Have you cut any jobs? Are you planning to cut any jobs here?
Well, we've been growing the business. We've been hiring people all along, and we've been growing our profits as well. So we have absolutely firm plans to add more people for the rest of this year. If we take Greater China, we've doubled our headcount over the last 4 or 5 years. So clearly, for us, it's business as usual.
Business as usual. Okay, Jaspal, how many people are you going to add then to your headcount across the Asia-Pac for the next year?
Well, we have a dynamic process around headcount, but we think take or give about 2,000 people between now and the year end.
Oh, wow, 2,000 people, mostly in China. Is that what I heard?
I think China will have a part of it, but I think it'll be quite spread.
But quite spread. Okay. Well, what about you know, costs? Because you know, hiring people is not cheap these days, and retaining talent is not cheap, and that's kind of contributing to the costs we're seeing for other banks. What about Standard Chartered right now? Do you feel that you'll be under pressure to dole out these big contracts?
Well, you know, if you look at our first half results, we've grown cost 8%, but that's way less than our income, which has grown 11%. So we've had a long-term commitment to our investors in the market that we'll grow cost in line with income. But we've done better than that in the first half. We feel very confident that we will end the year where costs will be within our income growth.
But you're also trying to build up your business as well, adding to your IB side, the investment banking side, as well as your commercial and retail banking side. So what about contracts? What about costs? I mean, you have to obviously pick up the best players in the space. How do you feel about basically getting talent right now? Is it tough?
It is tough, but we've had our share of hiring. You know, during the difficult period, we did pick up a lot of skill and talent from the market. We added lots of new businesses in the financial market space, in the equities business, in the private banking space. So clearly we feel quite well-staffed in the frontline sense of it. But more importantly, if you look at the first half, it's the period with peak inflation, wage inflation, and we've still been able to have discipline around costs.
Okay.
So we're feeling quite good about it.
All right. Well, with how well you're doing in Hong Kong, is there this pressure to move, I guess, your main office here to the city? Because, you get most of your revenues right now from Asia, but yet, some would say your headquarters is not actually based here in this region.
Well, for us, there's been no debate. I mean, Asia is home for us.
Yes.
We've always been here.
But it's not your headquarters.
We've grown here.
HQ.
70% of our business is here. Yeah. It's just some official sit-in in the UK. But more importantly, I think it provides us a neutrality because US still has most of our institutional investors. It has a regulator which has, common acceptance across our footprint between Asia, Africa, Middle East. So it's working for us.
Okay.